main areas that we're keeping an eye on is the kind of a continued trend of shareholder derivative demand letters, really focused on compliance with executive compensation plans, merger objection lawsuits on most M&A deals, and heightened activist debt investor activity in the space.
Joining me today to provide their insights on the insurance market and specifically the Nareit D&O program are Howard Sider, Vice President and REIT National Practice Leader at Arch, and Stephen Kelly, Account Executive at Alliant. Howard, it's been a few years now since we've gotten an update. Can you give us an overview on key litigation trends in the public D&O market, as well as any trends that are specific to the REIT sector?
Sure, Matt. So coming into 2021, the industry was really coming out of a 4-year period of significantly elevated securities class action activity, or SCAs, with average annual filings nearly double the prior 4-year period. In 2021, we saw a pretty significant decrease closer to historical norms, but it should really be noted that the majority of that decrease was a result of plaintiffs' firms beginning to file merger objection lawsuits as single plaintiff matters rather than class action matters, which remove them from the class action data. Core securities class actions, or SCAs, which are really kind of the driver of severity when it comes to losses in the D&O industry, were down year over year, but remain elevated over the historical average. Specific to the REIT industry, we've actually seen pretty stable claims experience over the past couple of years. Frequency trend for REIT securities class actions is pretty tough to rely upon because of the relatively small sample size of publicly traded REITs. But severity for securities class action settlements has remained fairly high. Outside of securities class actions, the main areas that we're keeping an eye on is the kind of a continued trend of shareholder derivative demand letters, really focused on compliance with executive compensation plans, merger objection lawsuits on most M&A deals, and heightened activist debt investor activity in the space, which, while it doesn't directly drive claims, does heighten the risk for future claims.
And Howard, can you also share some thoughts on how the D&O marketplace has changed over the past 3 years and how Nareit's Directors and Officers Liability program has responded?
Sure, Matt. So in late 2019, early 2020, the D&O industry as a whole transitioned out of a prolonged soft cycle and into a hard market. And there were a number of factors that drove this, but the key ones were the previously mentioned increase in claims activity over that 4-year period, loss cost inflation. During 2020, fear of a potential further increase in claims activity due to the COVID-19 pandemic, and the low interest rate environment. Specific to the REIT industry, it also transitioned from a soft D&O market to a hard market in that 2019-2020 period, although in our view that was really more a result of pricing and retentions falling significantly behind the growth of most public REITs during the prolonged soft cycle. Specifically in the REIT D&O sector, we also transitioned from a soft cycle into a hard market in that 2019 to 2020 period. Although in our view, that was really a result of pricing and retentions that fell significantly behind the growth of many public REITs during that soft cycle. The Nareit D&O liability program's goal has always been to support Nareit membership through all parts of a cycle. And to that end, from the 2019 to 2021 period, we actually increased capacity to the REIT industry by almost 30%.
Stephen, can you give us an update on other changes or enhancements the program has made in recent years?
Yeah, one of our core tenets is to constantly produce the best quality policy that we can for Nareit's D&O membership, which in 2020, as Howard said, was a very difficult year in the markets. We actually went forth with revising and adding to our form, which resulted in 2020 our work of coming up with a new policy form, working through that difficult period. Collaboration of Arch, Alliant, Nareit's outside counsel. We put together that form and had a delivery by the end of 2020, in December 2020. So our new policy format was well received amongst Nareit membership. We had a full year rollout from December 2020 to 21, and we had a 100% success rate. So we continue to produce even under times of adversity.
And Steve, finally, if people are interested in learning more about the Nareit program, how can they go about doing so?
Yeah, they can contact Howard or myself, either at Arch or Alliant. Our information is below, and just feel free to give us a call.